Hello everyone. I made this video thinking specifically about the people that invested in AMC back in 2021. I think it's been a while since anyone talked about this, and I hope this video provides some value to you. Now, I realized that by the end of the video, I didn't explain quite properly, or I didn't give the best explanation on how some of the indicators work. And I will try to make another video to cover that. It's just, I'm not that good at editing software, so you will need to hold if you think some things are inconsistent, but feel free to put something in the comments. I will try to make a video answering anything that makes sense. And none of the contents in this video are financial advice. And yeah, I hope you enjoy it. Hello everyone, how are you doing today? In this video, I wanted to vindicate the AMC community, or in general, the Amc Ta community with technical analysis. I know the general sentiment of the community is that technical analysis doesn't apply to meme stocks. And I think this is the biggest lie that has been gelled inside an echo chamber. And people have been tricked into thinking that there was nothing technical about this, when in fact, you could have prevented a lot of losses if you have read this properly. And I'm going to try to explain this. And also, I want to explain what has happened in all this time. Or at least we could start explaining why the general sentiment of the community towards TA is not that great. So what happened was that a lot of streamers tried to predict big price movements after what had happened on the 2021 sneeze, and it created a lot of false expectations, or people just wanted to hear from streamers that the stock was going to keep going up. But since the technicals didn't say that it was going to go up, people were kind of mad at them. So I mean, it's hard to judge what happened because they also were kind of cornered. And it's also what makes me uncertain on whether I should be making these videos or not. However, after some deep thoughts and thinking that I myself was one of the people that joined in the 2021 sneeze, and I lost a lot of money during all this timeline. So I thought it was better that if there are still people in this play that joined during that time and are holding the bag up until now, I think that they should hear kind of, I don't want to say the truth, but at least have another lens to look through it. Because if you have no target or are just hoping that the stock is going to go up, and who knows, maybe it starts going up to, I don't know, 5, 10, 20. Like, how do you know when you're at a point that you're comfortable selling? Or are you just going to look for your entry point or sell? If you have no real strategy, or you can prove any of your investments, if you have no way to sustain that it's a good investment, or that maybe you couldn't convince someone if it's not through conspiracy theories or putting on the tinfoil hat, I think it's very hard to argue that something is a good investment. And this is something that I learned after a while, after I was challenged by a friend. I said that actually I said that GameStop was going to the moon, and he said, "Why should I believe in you if I already lost a lot of money?" Because he was someone that invested with me at the time during the 2021 sneeze. And I'm kind of a proud person, so I was like, man, I really have no other way to explain it other than the cat equity errors and some other stuff that were mentioned during the at the time in other kind of subreddits. And that kind of made me notice that I didn't have proof myself, or I couldn't sustain my theory. And this led me to start looking into technical analysis to try to explain the price. Or I thought maybe if I'm right, I can explain it through technical analysis, right? If I'm saying that these things should happen, maybe by studying it, I can have more of a reliable source. And it was kind of eye-opening, everything that I learned after allowing myself to understand that technical analysis is kind of like physics when when playing pool, for example, or that if you play pool and the physics work in a different way than you're used to, that's the same way you would be investing without understanding technical analysis. If you have no parameters to look at, like it's so hard to make any guess of where should your exit or your entry point should be. So after all of that, what I want to talk about in this video, I'm mainly going to focus on two indicators. And these ones are going to be the SMA, which is this one in your screen. I'm going to explain more about it, but I think it's one of the most important ones, if not the most important of all the indicators. And this is probably one of the issues that a lot of the community had, that there was no consistent way to make uh, price action movements. Like, it was very inconsistent what everyone said. They would say, oh, the stock is going to go up because of this, and then it didn't happen. And I think the best way to understand these indicators, it's through looking at other stocks. If you try to use these indicators on other stocks, you will notice how they usually react. And even on stocks like AMC, GameStop, and all of these, if you go into smaller time frames, you will see that the usual rules always apply. Or if I could put it in another way, it's not that technical analysis doesn't work for all these meme stocks. It's that it has some very suspicious price actions, and it's not limited to only GameStop and AMC. I've seen it on the latest ones that have been popping recently. All these Open and Rocket and Cost and so many stocks that all the Wall Street Bets community has been hyping. I wanted to make a video about all of those because each of them has very particular technical features or traps, if I could say it. It's full of traps in the technical side. So all those meme stocks that have been popping, they're very tricky. So people need to be careful with them. And that's why I want to make a video about it. But that will have to take some time because I also want to make a couple of videos about GameStop. But anyways, back to AMC. I will be talking about SMA as I mentioned, and I will be covering the Fibonacci trend pattern. Those are the only two that I will be using today. There are other patterns that other streamers use. For example, the MACD or RSI, which maybe you have heard of, maybe remember of them if you're not an avid trader. But the problem with all of this is that they're not always that trustworthy. I'm going to mention this one for a bit, just so that you know how it works and how you can use it on your trades if you ever want to start making money on some kind of trades at some point. If you really want to make money in the market, you need to understand technical analysis. That's kind of my advice. And this is not just because I say so, it's because it's the only way, I think, to make consistent trades without having to guess if the stock is going to go up or down. This truly gives you a lot of data that you wouldn't get if you just look at the price action and the news. That's why it's very important. And I think the problem is that I keep jumping onto another subjects, but I don't care. Well, I think the problem with the market dynamics that are hidden behind technical analysis is that if you try to look for videos about all of this, you will usually find traders talking about it. So people have this bad concept of trading, like you hear some guy screaming a name of a stock that you should buy, and then you get rock pulled, and you get mad, and you just lose money. But that's not really what trading is. There are many ways to kind of make your own strategies around what the next price action is going to be and how to look at stocks that could give you some certain safety, to say it in a way. But you will only understand all of this if you start to make your own guesses on the stock market. That's why I want to make this video, because I don't want people just following whatever YouTuber or VTuber pops up. People should have their own criteria to see if a stock trade or buy is a good option at any moment. So without further ado, I'm going to be talking about these indicators. I picked specifically these two, the MACD and the Fib trace based Fibonacci extensions, because I think with just these two, it can give you a very good understanding of the price action on bigger time scales. If you're looking at the daily time scale, first of all, let's talk about this software. I'm using TradingView for any of you guys that aren't used to using it. This is a free application that you can download, and you can be looking at the same thing from your own end, from your phone or from your PC. Now, I'm gonna show you how to set up these indicators. So, for example, if you want to look at this SMA indicator, you click at here, and you're gonna pick this one, the cross. We're gonna be talking about simple moving average today. Now, first of all, what is this simple moving average and why do I think it's one of the most important ones? Is because most of, well, not most, but many other indicators are based on this. So, for example, if you look at the moving average, I'm gonna need to close one of these because I'm poor. If you look at the moving average convergence divergence, it's another indicator that what it does, it kind of smashes all these indicators into one single, and you can predict price action from here. So for example, if we're on the daily and we look at this signal, we're kind of getting that it's gonna get a reversal from here. And yeah, it's kind of what we got actually. So these indicators can be useful, but you need to be careful on what time scale you're using them. Because as you get on lower time scales, it gets a little bit unprecise. So anyway, we're not talking about this one today. Um, there are other indicators that are based on this one, and that's why it is important. That is what you need to know today. And you might be wondering, well, how do you read this? These are just a ton of lines that make no sense. Uh, how can you make sense of these ones? So, first of all, let's try to understand what these are. The simple moving average is an average of a given set of time. So, for example, I'm gonna remove a few of these for a second. I'm gonna leave these two. So I only left the 10 moving average and the 200 moving average, okay? The 10 moving average is very close to our price, and some even consider it like a kind of substitution to the price or a more visible way to look at the price. And the reason it's so close to our current price action is because it's taking the last 10 days and creating a point. So the next day it takes the last 10 days and so on. I don't know if that makes sense. I'm terrible at explaining some things, and I'm sorry about it. But I hope you get the point. As time goes on, this moving average keep changing and it keeps creating a new line. So this 200 moving average is the same thing, like an echo of our price, but it reacts way slower than the 10 moving average. And that is because it's considering a lot more days, so whatever sudden price changes happen, it's gonna react slower to them. But the funny thing about this indicator is that it's very relevant. And what do I mean by relevant? That the price action reacts a lot to it. And I will try to show you this with a few examples, but I just want you to understand how they are formed and what they are, at least to begin with, okay? And as I told you, it's not like it's the average of the 200 days always. Like for example, if I move to a 5-minute time frame, ooh, this changes a lot, right? And if we move to the 5-minute time frame, my 200 moving average is at a, it's completely different, right? It's way closer to our price. And that is because it's taking the last 200 ticks inside the 5-minute chart. So depending on the time frame that you're looking at, you're gonna get different graphics. Your 200 moving average is gonna move. Now, once you understand how the price action is, sorry, not the price action, how these two lines are formed and what they are basically, what I want you to understand now is how these lines can be used to kind of predict what you can expect the price to do once you understand how these are created. And to do this, I'm going to be looking at the 5-minute chart. I'm going to explain to you how I would narrate the last few days, the last price action, maybe since around here. I'm going to try to zoom in a little bit so that you can see it clear. In this example, I'm going to use two examples. One is going to be very smooth for the people that are not used to any of these things, so that you can see very visually how these are interacting with the price action. And then I'm gonna give you a little bit more of a practical approach to how to use them, or at least how I use them in my trades. You should not do anything just because I say it. You should do your own research and don't take anything I say for true in this video. I will add links to videos that explain this in a better way or explain it a little bit more detailed. But I'm still gonna try to uh, explain it in a way that makes sense, okay? So my first way to explain it is by looking at this as if these two guys were kind of skydivers that were carrying huge hoses that every time that they crash into our money mountain, our stock price, uh, they kind of inject fuel inside it. But the thing that you need to learn is that this guy is a little bit shallow, the moving average 50. So sometimes he's going to be providing some liquidity and sometimes he's not that useful. You will see what I mean in a second. So let's say we're starting our travel today. Well, not today, at this point, where this guy is falling off a cliff, right? So what is happening on this price action? We see a huge low and this guy starts falling off a cliff. Depending on the distance between our price action and this line, is kind of the fall that you're gonna expect. So when you start seeing big falls at a specific point where it's likely you're gonna get downside, and we could even draw the fib for this, but I'm gonna save that for later. Let's just say that as this guy is falling, the distance between these lines is usually gonna tell you how big the fall is, and it will also become kind of a test to the bulls. These kind of falls are asking where are the buyers? How long is it gonna take for the buyers to show up and start buying this dip? These are the uh, this is how you could read these things. So in here, as this guy is falling, you start seeing the price action react to it, right? It starts rising as it's falling, but this is a usual move that you see. Whenever you see a big fall from any kind of move, there will usually be two waves. Like the first wave that is trying to catch this guy so that it can start providing liquidity to your money mountain. But sometimes the first run up is gonna get sold off by the people that bought at this level. So all the people that are expecting it to go up, maybe they see a little push up and they're gonna sell off. Or maybe there's people that bought in here and didn't sell while it was here. So whenever you have a little run up that is followed by a sell off after a big fall of a cliff, this is a very common reaction that you will see. And you will see it on bigger timescales, but it's good to know that this is something that happens, okay? So what happens after this? Uh, right, of, right as we're crossing this line, what you're seeing is that these guys, again, start falling off a cliff, and this guy is caught up almost instantly. So you see the guys buying this dip. What they're expecting is the price is gonna go up, and after you guys this skydiver that I mentioned, uh, if you start catching this guy and the price keeps going up, it kind of gives confidence to the market sentiment. Whenever this line is being covered by the price action, it is usually a sign of confidence that bulls have control over the price action. But what happened was that it wasn't caught up and it got sold off. So what we're seeing here is that again our 50 SMA starts falling off a cliff until it gets caught up by the buyers at this level. So this is something that keeps going on any time frame. You can keep looking at it as a way that the price is always going to be trying to catch up these signals whenever they're closing in after a big fall. And so, for example, here, whenever you see that this line starts flatten, it kind of gives you confidence that you might be on your way to consolidate and then move up. But that is one of the trickiest things about these meme stocks. That sometimes the price action that you would expect to move the stock to certain direction, you sometimes get these big sell orders that come out of nowhere. And this happens in all the meme stocks. So this is why it's not so recommended for traders to be in, because it's not reliable what the price action will be on several steps. However, this only happens on smaller time frames. Like you can predict when a huge sell order is gonna be hidden at one point. But if you look at the daily, the price action will be way more consistent, or at least the signals that you get, they're usually way more representative. Now I'm just gonna jump back to the 5 minute chart, back to the latest days, just so that you can see that these kind of dynamics keep happening, right? Anytime we have a sell off, you're gonna have this signal going down, and these buys are people thinking that you got the dip of this sell off. But yeah, they're usually not that easy to find. It's not, or at least I would say it's very risky that right after a sell-off you buy instantly, because you have no certainty that the price is gonna keep going down, or it's gonna bounce at that moment on any of the time scales that you want to look into it. I would say it's almost usually risky to buy straight away the dip, unless you have very good reasons to do so by other indicators. But that would depend on the play or the stock that you're looking at. If you're looking at meme stocks, it's very risky to depend on low low time frame indicator. But still, it is very consistent on some of the dynamics that it has. So, for example, this one, as the line is getting near the price, you can see it start climbing. It's kind of well, this is another part of the explanation that I want to give. If you can see it consistently, that every time the blue line is crossing behind the price action or price line, it will usually mean that the stock is going to go up. Whenever these lines are below our price action, it's usually a bullish indicator that uh, the stock is going to go up. So, for example, in this part, when these two indicators are entering deep inside our price action and it is getting followed by big green candles, it is telling you that the stock is in a pretty good direction. And after you see these initial buys, you can expect the price to go up for a while. Now, how can you tell when you're at a point that it might start going up or down at a certain moment? So, for example, I'm just looking at the 5 minute, right? If I was a trader and I'm looking to buy into any of these waves, what I would be looking at, the setup, and this is the second part that I wanted to talk about of the explanation, is that every time these two lines cross or get near, it kind of becomes a battle. And what do I mean by this? The stocks don't tend to stay at a certain level, right? Why is that? Because either people are interested into buying the stock because it's going up, or if no one is interested in buying it, then the people holding it are gonna think, why should I keep my money here if no one's buying it? There's no presence of buyers, so I'm gonna sell it. And that's what causes the sales. If there are no buyers, the people are gonna sell. And that's why stocks don't tend to stay at a certain level. So whenever these two lines cross, it means that you're getting on a level that both of your kind of price actions are averaging down, to put it in a way. And what happens is that at any given time frame, it becomes a battle of whether bulls or the bears have control at that certain point. And what do I mean by this? Uh, we're looking at the 5 minute chart, right? So even on a very low time frame, we're gonna keep having these battles. But if you look at this time frame of the 5 minute, you're gonna have a lot more battles than you would have, for example, at the 1 hour. Although these look like still quite a bit too many, they are less than what you would see in the 5 minute. Yeah, if you look at this, you can probably try to count them, but you're gonna get more. As well as if you went to the 1 day chart, like in here, you're gonna see way less battles. How can you tell if I'm telling the truth or not? Well, the way you can know this is true is because of this dead cross and golden cross. And if you've been in the meme stuff, so you've probably seen some of these posts about, oh, we got a golden cross or a dead cross or whatever, and mentioned in some of these things, and people will be like, oh, that doesn't matter. Technical analysis doesn't apply to meme stocks, and that is just dumb because if you see it in here, it quite predicts what happened with the price action after we got those signals. So I'm gonna explain how these work. The dead cross and golden cross, their concept or of what they are or how they're built, is that whenever these two SMA lines cross, the 200 and the 50, depending on whether your price action is below or behind that happened of presumably future video. One of the weirdest with these SMA lines. Let me show you price action, it's usually I kind of lost my point, so I'm gonna get back to my whole point with explaining this dynamic that whenever these two lines and what I wanted to show you is that you will usually get what the result of any kind of battle was, especially on bigger time frames. Like when you look at what happened back in 2021, is that we had a huge battle and you could say that the Bulls won, despite whatever happened here. And then we had another battle where the stock lost and we had a huge down run. And you could keep it, for example, the people that bought this dip, they were hoping that this was going to consolidate and maybe start running for. Unfortunately, what we got from here is that as the as these lines were crossing, you could almost see it as if they were crossing because this could also almost be considered. But the stock also lost it, right? This is kind of what this price action means. And this is another move that people could have prevented if they understood more technical analysis. Like if you see this SMA 50 jumping off a cliff uh, after the stock has been stagnant for so long, and you don't bulls showing strength at any of these early stages, you could expect that the price was likely to go. Now, you obviously expect that it was going to go this, at least based only on the SMA indicators. Because this indicator isn't telling you how low or how high a stock can go. It's only showing you if it's going to have a change of direction or not. Now, I mentioned all of this, and I think it's relevant because we're closing in to a kind of big battle on the next few days, probably. I don't know how long this is going to take to close. But whenever this closes, we're going to have either some more downside or a jump to the upside. And this is relevant because I think the stock is not going broke, right? I think after looking at the what's it called? Yeah, after looking at the quarter results and where the company is standing with its earnings and overall its debt, uh, I would say the whole economic position that it has, I don't think the stock is dying or going down. So whenever you see stagnation of this, the stock tends to usually blow up either to the downside or the upside. That's why I think that if the if the company can prove that it has the fundamentals to start going up again, you could start to see some price action to the upside based on the technical side because these indicators are closing it right. And you might be thinking, well, why do I care of any of these if the stock is at the $3 price, around the $3 after maybe I invested when it was around, I don't know, $200, pre-split and after. Well, that's why I want to talk about these other this is called fib fib extension, trend-based fib extension. I can't even read. I will also give you or link a video to how to use this properly. I'm not gonna say I'm an expert at using this, but I have found them to be very consistent usually. So the way these work, uh, and you should know, these are also a bit of an art. Not because you draw them in a certain way, the price is gonna follow up whatever you draw. These are ways to follow up the price action that you're seeing it and representing it in a meaningful way that you can get at what levels you're gonna get resistance. So, for example, if you were looking at these last few days, I'm gonna go into a lower time scale just so that you can see it more. Okay. So what this tool do is it gives you kind of the levels at what you would expect it to consolidate, and you can use it on different time frames. I think the lower you go, it gets more unpredictable because, like I told you, you can't be always aware of when you're gonna have a huge sell order hidden somewhere. Uh, so on a lower time scale, it's a little bit trickier. But for bigger timescale predictions, I think it's a bit more consistent. So, for example, at this point, if I was looking at this chart, and for example, I was holding around here, right? maybe I'm thinking, oh, finally the stock is going up. I think we're gonna have some more price action. How do I know we're at the top? Or what could be the indicators that could tell me we're near the top at this? Well, what I would look at is first at the SMA. This line, as it is flattening, it's telling me that the upward momentum is kind of dying. There are more sellers showing up, more people are exiting their positions, and it kind of makes sense after you had all these buying sections that are below it. So the buyers are exhausted at this point, and you start seeing a sell-off because there are no more buyers that are going to buy. If more buyers show up, they would probably get sold off. And how do you know this? Well, for for lower time frames, I think sometimes this is more the RSI. This indicator uh, is called RSI, and it stands for Relative Strength Index. And the way it's used is that whenever it reaches this, it is considered overbought to be to start going lower from that point. So, for example, you see it oversold, sorry, overbought in here, which means that it's likely to start going down, and you see the instant reaction at that moment. But that's why it's tricky. Like for example, it will tell you that it is oversold, but that doesn't mean that it's the lowest point possible. It's only at its lowest point relative to its how, how can I say it? It is showing strength relative to its current position, but because this stock has some hidden sell orders that usually don't make sense in a consistent way, weird orders hidden from time. This indicator is not always that useful, but sometimes I think when I was looking at this, I saw that it was overbought and yeah, I was kind of expecting a. But I don't think, yeah, as you can see, this indicator is kind of tricky for meme stocks, so I don't recommend it a lot. I think these two are way more consistent, just using trend-based fib extensions and understanding the SMA. And maybe if you want to take a look at, maybe understand more how the MACD works, it's this average convergence divergence. It is another indicator that the price action sometimes but I'm not gonna cover it right now because it's really late and I also. So at this point you might be wondering, okay, this is cool and everything. This fib-based tool kind of gives you at what levels it might go up or down based on other indicators, like, but it's not telling me anything. I already lost a lot of money and I don't know if I'm ever gonna make it back. And how do I know uh, what's gonna happen? What's the future of this thing, right? That's what everyone is wondering. So, what I think, and of course, this is not a prediction of any kind, so don't take it like. But I just want to talk about what the indicators. It has a very interesting trend fib extension when you look it at the bigger, and you might be wondering what is going on in here. Well, what I see, or at least my way to analyze it, is that all of our resistance levels are at way here. You know, all the price action of the accumulation that happened from the buyers happened at all these higher prices, like starting from around 38 to 48, and yeah, these huge prices for our current price action, right? Um, yeah, it's very sad. But the thing is, it kind of proves its point that it has potential to start going up. The kind of positive side of all of this is that there are no resistances at these levels. It didn't have those consolidation points that we had through all these times, throughout 2021 through this big sell-off and we didn't have much of that consolidation. Like you could say this one is one, and it probably is. So if the stock keeps going up, you could maybe draw a fib of what could happen down here. But on a macro level, the way I read it is that it's very likely if the stock starts pushing up, since there are no big resistance under this point, I think it is very likely that it could reach back some of these levels. If you see the stock start going up to like 4, what you can expect is that it's likely to get maybe to 20. yeah, around 24, and maybe have some sell off here, maybe go up here and have another sell off and start doing its own thing. At but I can't predict to you exactly at what price it's gonna reach, or I wouldn't want to promise anyone anything. Even this, I wouldn't say it's something for certain that it's, if the stock starts going up for, I think this is the most likely outcome. And you don't need to believe me. You should make your own. You should make your own BD. Learn how these indicators are used on its own, just so that you don't think I'm being biased or you don't bias your. But yeah, I think a lot of people have invested a lot of time into these stocks and have probably learned a lot more than they. And I also think that they can actually make some profit if they're already in the market and you join the market to make money. I think this is the one of the best. Like I would say, technical analysis is one of the best flashlights to see. Um, I'm gonna be making a few more videos to explain some of the concepts I have, especially about GameStop. There's so much happening right now that I want to cover, and there's just no more time left for me to do it because we're at a very important. Well, at least I would say that stock is having very interesting price action. So I will try to cover it, and yeah, stay safe. I hope you're doing great, and I hope this was useful. Let me know what you think in the comments. Subscribe if you like it, and if you find anything that you would like to hear in any other videos, please let me know. And yeah, stay safe.